Alright guys, so I hope you're doing fine as always. Today I'm making a quick video about risk management and how I implement risk management in my trading. So risk management is really key in every trader's career. Without risk management, you're just bound to blow up your account and lose everything you have in your trading account. So first of all, what I personally like to do is I like to keep my risk uniform for every single trade. So my risk, which I'm calling R, is uniform for every trade. So let's say, for example, I'm risking 50 bucks for every single trade. So R is 50 USDT. So it doesn't matter if I'm now trading on Link chart or on Bitcoin, Ethereum, and so on. Every single trade I'm taking, every single time my stop loss gets hit, I'm losing 50 USDT. So if we draw an example, say something like this, take profit, and I'm looking for a long position. I'm having my stop loss at the red line, my entry at the blue line, my take profit at the green line. So every time price is going against me, I will lose 50 USDT. So minus 50 USDT. In this case, we have a 3 to 1 risk to reward ratio, or a 1 to 3, sorry. So we're risking 1 risk factor. If price is going against us, we're gaining 3 risk factors. Is price going in our favor? So we're winning 150 USDT over here. So let's say price is jumping like here, we win 150 USDT. In this particular trade, price goes against us, we lose 50 USDT. In the next trade, price going in our favor, we win 150, goes against us, we lose 50. It's really easy to know how many units of this asset you have to buy. In this case, we're sitting on Link. We're sitting on 7 bucks, 6 bucks, 6.3 bucks. So now if I want to take this trade hypothetically, let's say something going like this. So I want to enter here. Then I need to know how many units of Link I need to buy in order to lose 50 USDT when price is going against me. So how to calculate this? We double click. Our account size, you can set it to something really big, doesn't matter, because we're just having a USDT value as our risk factor. You can also set a percentage, then you need your account size to be exact. But I don't like using percentage, I like to stick to a real value. So let's say I want to risk 50 USDT, my entry price is set, my take profit price is set, my stop loss is set, I'm clicking on OK, and we'll see I need to buy 276.243 Link. So units equals 276.243. So I need to buy a total of 276.243 units of Link, and to reach this amount I can use leverage. So I can use some leverage in order to reach this number. What you have to keep in mind with leverage is your liquidation price. So let's say on 2x leverage my liquidation price is sitting here, 5x leverage is sitting here, 10x leverage is sitting here. On 20x leverage my liquidation price is now above my stop loss. Keep in mind these are hypothetical numbers, it will be different for every single trade. But when my liquidation price is sitting below my stop above my stop loss, I will get liquidated before I'm getting stopped out. So I lose the whole margin I put into this trade before I can get stopped out and only lose my 50 USDT. So for a long position, I always need to make sure that my liquidation price is sitting below my stop loss price. For a, let's see, for a short position, I need to make sure my liquidation price is always above my stop loss price over here. Because if it's sitting below, I'm getting liquidated, so I lose the whole margin before I can get stopped out. Let's say my margin is 500 bucks. I put 500 USDT into this trade and I want to only lose 50. If my liquidation price is sitting below my stop loss, I will lose my 500 bucks before I can get stopped out and lose 50 bucks. So very important to always keep track of your liquidation price. It's also very important to always have an exit plan. So you always need to know before you enter a trade where you're exiting a trade, either in a profit or in a loss. You see a lot of time that beginning traders keep their losses running. So let's say they enter along here. Let me remove this one real quick. They enter a long trade here. Price is going up a little bit, but then we have a dump down. Instead of having their stop loss, they keep the trade running. We see prices move something like this, it coming back up. Eventually, we're reaching their take profit. And then they usually get the habit of, oh, I just need to keep my trade running, or I need to add some extra margin, and we'll be fine. In many cases, this will be the case. You will be fine if you're not super over leveraged, of course. But it's really creating bad habits, because if you're creating the habit, I'm just keeping my losses running till price comes back into my favor, you will eventually have that one scenario where prices won't come back to your area and keeps going down till the moment you run out of margin to add to your trades or put as collateral and you're losing your whole account balance. So really important, always have your stop loss. Don't create the habit of I'm keeping my trade running down and eventually it will come back into my favor. Never do that. Bound to happen to blow your account. So that's that. Now, what's this risk to reward ratio? It's I'm risking 1 unit, or I'm risking 1 risk factor, and I win 3 risk factors. So my minimal cutoff is to have a 2 risk to reward factor, at least, at minimum. So if it's below, if it's like a 1.5, I'm not interested in the trade. It needs to be worth my while. So I want to see at least a minimum of 2. So I want to risk 50 bucks and I want to make a minimum of 100 bucks. Sometimes you see screenshots of people sharing, I'm making 1,000, 2,000 bucks in this single trade, but you don't know how much they risked. So you tell me if it's a good trade if they risk, let's say, like something like this. So they risked 500 bucks here to make only 250 USDT. You have a nice screenshot of, oh, I made 250 USDT, but you're risking 500. That's not sustainable. So it's always important to have a good risk to reward ratio and to have your exit plan in place. So don't get fooled by people showing very big screenshots. It doesn't matter. Big percentages of ROI, so return of investment, don't matter. Reason is if I enter this trade, right here on, let's say, 5x leverage, I'm getting an ROI. So 5x leverage equals or gets an ROI of 50%. But if you take that exact same trade on a 10x leverage, you will get an ROI of 100%. Where is my percentage? It's dark in here. Percentage. So you see, it's the exact same trade, and the ROI will be different based off your leverage. Also, my margin in this 10x leverage trade will be half of in the 5x trade. So the lower my leverage, the more margin I need to put in order to reach these needed units for my stop loss. The higher the leverage, the less margin I need to put in because we're borrowing more from the exchange, but the higher my liquidation price will be. So leverage really is only a tool in order to help you with your margin in order to reach your required units of your specific coins. It's not a tool to degen. Let's say I have 100 bucks, I 100 exit and we'll see where it goes. As many people do, they just use leverage to increase their margin. But leverage is really a tool to reduce your needed margin to reach the amount of units you need to buy. And that's very important to use your leverage correctly. Again, leverage is just a tool to reach the amount of units you need to buy in order to get your desired stop loss. So you can even change your margin during trades. So let's say you're taking a swing trade, price is going well in your favor. You can increase your leverage during the trade. So the locked margin in the trade becomes smaller. So you have more margin again to take some scalp trades and so on. So really important, use your leverage correctly. So now finally we can have a look at the relation between your risk to reward ratio and your win rate. So see, we have this beautiful table over here from the internet. Feel free to take a screenshot. I'll give you a moment. So if you have a screenshot, we'll have a look at them. So we have the risk to reward ratio compared to your win rate and why it's so important to have good risk management. So we can see if we win 50% of our trades on a 1.1 risk to reward, we'll be at break even. But if we take trades that have a 1.1 to 2 risk to reward ratio, so I'm risking one risk factor to gain two risk factors. So in our USDT amount, I'm risking 50 in order to win 100. I only need to win 40% of my trades in order to be profitable. So I need to win 4 out of 10 trades in order to be profitable. Do we change it now to a 1 to 3 risk to reward ratio, what we have in this example? So I'm risking 50 to gain 150. We can see I only need to win 30% of my trades in order to be profitable. So I only have to win 30% of my trades. If we go to 1.4, we'll need to win 20, or 20 is to break even, so 21, 22, it will be all around break even. 1.5, we only need to win 20% of our trades, and so on. If we have a look at the opposite side of the table, if we have a 2 to 1 risk to reward ratio, so we're risking 50 bucks to only win 25 bucks, we'll already have to win 70% of our trades in order to be profitable. If we change that to 3-to-1, we already have to win 80% of our trades. So you could see it's really important to have a good risk to reward ratio. So you only have to win like 1 in 3 trades in order to be still profitable, or 1 in 4 trades in order to be still profitable, and so on. So that's why it's so important to keep your risk uniform across every single trade. So if I'm taking 3 trades on a 3-to-1, let's say, and I lose one of the trades, I'm still making $100. Or what? Oh, sorry, what am I even saying? That's wrong. So I lose 50, let's say in the first trade, minus 50, then I win 150 and I win 150, so I'm 250 in profit still. Equals, come on. So even though I lost one of my trades, I'm still in profit. So now let's say I'm losing 2 of the 3 trades, I'm still $50 in profit. So even though I only won 1 out of 3 trades, I'm still sitting at a 50 USDT profit for losing 2 trades out of the 3 trades I took. So that's really the strength of having a good risk to reward ratio and having good risk management, where you keep your risk uniform for every single trade. And you will see that even though you have a lower win rate, you will still be more profitable than you let your trades run against you, in the hope they will reverse somewhere in the future and not liquidate your whole account. So that was pretty much all that is to risk management. If there's any more questions about it, please feel free to post it in the Discord server or write it in the comments, and maybe I'll make a follow-up video if I forgot something, or if there's returning questions, I might add it into another video. So as always, take care guys, and I'll see you soon. Bye bye.